Hey everyone, welcome back to Money Auto. Today we're diving into the latest market action, and it's been a pretty exciting week.
Absolutely, Alice. The Dow Jones Industrial Average hit a new record high, fueled by positive inflation data.
It's also important to note that the S&P 500 and the Nasdaq also saw gains this week, extending their positive momentum. However, it's worth highlighting that Nvidia had a 2% decline, which pulled the Nasdaq down slightly. Well, it's likely connected to some news out of China. It seems the Chinese government is pushing for their local AI chip makers to gain market share.
You're talking about the pressure that Chinese companies are facing to switch from Nvidia chips, right? So,
Exactly. They're discouraging companies from buying Nvidia's H20 chips, which are super powerful and used for developing AI models. They're not explicitly banning it, but they're definitely making it clear they want local companies to step up.
Makes sense. This is part of China's bigger goal of becoming more self-sufficient in key technologies, especially in the face of US sanctions. They don't want to rely too heavily on foreign companies, especially in such a critical field. However, there are no alternative China's solution for them to replace Nvidia AI chip. Nvidia is essentially the gold standard when it comes to AI chips, and companies like Meta, OpenAI, and even Alphabet use them heavily.
Absolutely, and several big Chinese tech companies like ByteDance and Tencent even stockpiled Nvidia chips before those US export controls kicked in.
So, what does this mean for Nvidia?
they are a major player in the market, and it seems like China is a big part of their business.
It's definitely a significant development. Nvidia's CEO, Jensen Huang, even acknowledged the pressure they're facing.
And the stock market reacted to this news, with Nvidia shares taking a hit.
Speaking of China, we can't ignore the recent surge in Chinese stocks. They saw their biggest weekly gain in almost 16 years.
That's right, Alice. The CSI 200 index, tracking large Chinese companies listed in Shanghai and Shenzhen, jumped by 4.5% on Friday alone, culminating in a 15.7% gain for the entire week. That's a significant move.
It's important to note that this rally was fueled by China's government's stimulus measures aimed at jump-starting the economy. These measures are designed to boost growth and confidence in the Chinese market.
Absolutely. China is facing economic challenges, with slowing growth and a weakening property sector. The stimulus package includes things like infrastructure spending, tax cuts, and support for struggling businesses. These measures are intended to increase spending and economic activity.
The market is reacting positively to these measures as investors see them as a sign that the government is committed to supporting growth. This has also led to a surge in the Hong Kong Hang Seng Index, which rose by 12.8% this week.
That's a great point, Alice. We'll be sure to provide you with all the latest updates and analysis. Make sure to subscribe to our channel and hit that bell notification so you don't miss a single update. October 11, 19.
Thanks for watching, everyone. We'll see you next time.